Investors on edge as markets wait to hear President Trump's decision on whether the U.S. will get involved in the Israel-Iran conflict, wait for Jerome Powell to take action on rates, and wait to see what the impact of tariffs will be, all big potential risks to the economy. Joining me now, Apollo chief economist Torsten Slok. Great to see you again, Torsten.
Thank you for having me, Jack.
So, economics is sometimes called the dismal science. You're not quite Malthusian, but you did just publish 5 potential risks. Let's start to the one that's in the headlines today, the Israel-Iran conflict that sent the price of oil up about 20%.
Yeah, and oil prices going up, of course, is going to lift inflation. And oil prices going up also means that we're going to buy a little bit less energy. So if you raise oil prices in the Fed's model of the U.S. economy by $10, it will raise inflation in round numbers by 0.4%. And it will lower GDP also in round numbers by 0.4%. So a very modest headwind to the economy coming from higher oil prices.
Not a recession caused or anything like that. But the trade war could also, if there is a trade war, I mean, we're kind of hovering on the edge of a trade war. What do you see there?
Yeah, the key issue now with the trade war is that now it looks like there's more stability in terms of what tariffs do we have at the moment. It looks like that may also continue. We do have some deadlines coming up, but at the moment, the key issue is how much of tariffs will be passed on to consumers. Let's assume inflation has now been relatively well behaved, and if less is passed on to consumers, well, then earnings will be going down more. If, on the other hand, companies pass more on to consumers, it will be better for earnings. So what we're watching over the next several weeks is what is the evidence that companies are passing more tariff and high price increases onto consumers, and what is the evidence that that's not happening. So in a nutshell, the key reason why this is important is, of course, that if we have higher tariffs being passed on to consumers, it will also, just like oil prices, point in the direction of more inflation.
Got it. Immigration, also on your list.
Well, at the moment, of course, we have, importantly, a significant amount of deportations and restrictions when it comes to immigration. And the government, of course, the Trump administration has the stated goal of deporting 1 million people from the labor force. And simply speaking, if you deport 1 million people from the labor force, that also means we have fewer workers and ultimately also means some upward pressure on wages. We already saw that in the latest employment report. Wage inflation is going up. So simply speaking, if the labor force is shrinking because of deportations and less immigration, that will also happen to be modestly inflationary.
A lot of data shows that the economy is really hanging in there pretty strongly. You point to a few potentially worrisome indications, including what's happening with student loan delinquencies.
Yeah, during the pandemic, we all got a moratorium on paying back your student loan. So that meant that you didn't have to pay back your student loan, or you did have to, but if you didn't do it, it would not impact your credit score. But what we're seeing at the moment is that we're seeing delinquency rates on credit cards go up. And as the chart shows, the light blue line has been moving higher. We've also seen in the yellow line that delinquency rates on auto loans have been going up. But the new development is that now, because it's being recorded by the rating agencies, we are now also seeing delinquencies on student loans also going up. And that's beginning to become also an additional headwind, because if consumers now have a harder time borrowing to buy a car, to buy a washer, dryer, even buy a home, that is also a headwind to the economy, simply because consumers now are being recorded in the rating agencies that their credit score, meaning their ability to borrow, has been lowered modestly.
Right, so you and I have been talking about the national debt and the deficit forever and for decades, right? And it really hasn't seemed to be a problem. I feel like now maybe we're at an inflection point.
Well, there's more attention being paid, and this is our final worry, to the fact that debt levels, of course, have been going up now for decades. And the problem is, when debt levels go up, is, of course, that there's more and more questions about who is going to buy our government debt. And there's a lot of statistics you can look at, what is being purchased by foreigners, by domestic insurance companies, pension funds, by households. We all like higher interest rates, but as the chart shows, the trajectory that we are on, this picture literally starts in 1776.
That's
we
extraordinary.
still have an increase in debt to GDP ahead of us, and that is raising some issues around who is going to buy the government debt, and most importantly, what are the upside risks to long-term interest rates, including mortgage rates, if more government debt needs to be issued.
Let's wrap it up on a happy note. Things could go right. We could solve the Middle East issue. There's some indications in the economy. Maybe rents are coming down. That's anti-inflationary. What's the good news here, Torsten?
Well, the good news is absolutely that when it comes to a number of areas that we just talked about, we have seen modest improvements, especially when it comes to tariffs and trade deals. We saw a trade deal, of course, recently with the UK. We've also heard more good news in terms of potentially a trade deal with Europe. So on the tariff and trade front, maybe some of the uncertainty is going to come down, and maybe therefore markets will take that as a positive. Likewise, as you're saying, there could be other fronts, including oil prices, including also various aspects of what's going on with, in particular, of course, on the debt ceiling and the one big beautiful bill. But the bottom line is, yes, we could see a number of good news, especially when it comes to trade deals and tariffs.
Good place to end it. Thank you very much, Torsten Slok. Always great to see you.
Thank you.